Sheth, Co-CIO of Pharma Capital joins us. Rushabh, good morning. Always nice
Hi, good
to
morning.
have you back. There seems to be a mid-air turbulence in small and mid-cap stocks. Do you think the party is over?
I think they've done very well for the last 3 years since the COVID. So I think some amount of consolidation was expected, and I think some reason comes through always in markets. But our general sense is that yes, some consolidation will happen, and which might not be too bad for the markets.
It's been your portfolio strategy. Are you looking at taking some chips off the table after the recent rally? Is it time to consolidate? Is it time to go cautious now?
Yeah, we've taken some money off the table, obviously. Also, we've reallocated some money from where we stand. I think so. From our perspective, we've done our bit of it. By and large, we really don't move our portfolios very rapidly. So anyway, our changes in the portfolio are much slower. But yes, we have done some changes over the last 6 to 8 months.
And would you like to throw some light on that? Because last time when we spoke to you, you were bullish on banks, you were bullish on media. Have you changed the pecking order there?
No, not banks, Nikunj. We are bullish on pharma. We continue
Sorry,
to
you had no
remain.
banks. You had no banks. My
Yeah,
bad.
no
You had no
banks. Yes,
banks. Yes.
we continue to remain bullish on
Age is
pharma.
catching up, Rishabh. What to do? You should come more often.
No. We continue to remain bullish in pharma. We really like the story. We think that it's a structural story for the next 3 to 5 years, especially the domestic healthcare side. From our perspective, we continue to like communications and telecom. Yeah, and of course, we still continue to own some media. You have see some speed bumps in the industry in the last 2 months, but that I think is it's a part and parcel of what we do.
Rushabh, we had this interesting discussion with our show ET Now on the Go. We'll be playing out a slice of that with DLF, and they're really talking about the investment roadmap in India looking very promising. We've got an interesting discussion lined up on infrastructure, which just brings me to my point. In light of the elections, in light of the fact that everywhere you look around us, there's so much infrastructure development that's going on. What about your outlook on this entire CapEx-related theme?
No, I think the infrastructure story has to play out because unless we put the physical infrastructure in place, we will not be able to sustain a higher growth rate. So from an investor standpoint, the infrastructure story has to play out because that is critical to what we want to do as a country over the longer term. And we are also in many ways participating in it through some of the companies that we own. However, I think the bigger story to us is that India will still remain a domestically driven economy. And over the longer term, there are a lot of interesting structural ideas which we think will do very well. Especially, if and when we get to that $5,000 per capita, the kind of spends we will see in the economy might be very different from what we've seen in the last 10 years. So from our perspective, we continue to look for more longer term ideas. We, of course, continue to play some companies in the infrastructure space. So it's a mix of everything for us.
Okay, fair enough. How about, the inherent risk for the Indian markets? Where exactly do you see that stemming from?
I think one concern we had this time in the reporting season has been the slowdown in volume growth. So if you look at volume growth across industries has slowed down. And yes, you have seen significantly better profitability because of a lower raw material base as compared to last year. So overall, your margins have looked better. However, I think the concern is stemming from the fact that a lot of industries are not seeing the kind of volume growth that you would want to see. And I think that continues to remain for us a reasonably strong concern because we came out of a very strong busy season from a festive season perspective. And even in that festive season, we didn't see too much of volume growth. And keep in mind that this time Diwali was shifted a little bit further down in terms of the third quarter. So that is to us one big concern that we are kind of watching closely.
In general, one has to look at some of the popular themes. Defense, railways, infra, construction. Now, these are all very cyclical businesses. 3 good years, 5 bad years, or 5 good years, 3 bad years. I don't know what is right this time, but these are cyclical businesses. And cyclical businesses are commanding P multiples. I'm just bringing out for our viewers. Cyclical business is a business which goes through ups and downs. Compounding business is something which grows irrespective of what the economy is. Now, Rishabh, having introduced the concept to our viewers, which is what we're doing, why are these cyclical businesses like defense and railways commanding such high P multiples?
Yeah, I think that's largely from what you mentioned earlier is the kind of spends that we are seeing on the infra side. Having said that, you are absolutely right that at the end of the day, many of these businesses go through cycles, and therefore, as an investor, you need to be cognizant where you are in the cycle. And generally, optically, what happens is many a times these companies look cheap. Cyclical businesses look cheap at the top of the cycle. However, this time we don't know where we are in the cycle as yet, but clearly they are not looking cheap anyway. So I agree with what you said, Nikunj, that generally these companies you will go through cycle irrespective of what we say, because that's the nature of the beast. And we are clearly in the middle of the cycle now. We don't know how far down we are in the cycle.
Rishabh wanted to understand whether it's time to bet on a comeback in IT. I mean, the stocks have already made a comeback, most of them already at their life highs, including TCS, by the way. But you think, there's merit in investing into these names?
I think we'll have to wait and see how IT pans out, because I think again there is this concern on growth, which I think is still continues to bother us a little bit. I'm saying more for the larger companies, and there are niche companies which are doing much better. So I'm not talking about some of those. So clearly for the larger companies, growth continues to be a concern. US continues to be their largest market for many of them. We don't know how US will play out. At least we have no clue in terms of how the economy in US will play out. We are running into election year in US as well. So from our perspective, we are a little bit cautious on IT. And also the valuations are not really attractive. So you kind of superimpose the growth on top of the valuations and the outlook on the environment. It kind of makes us a little bit more circumspect.
What could be the next big trigger for the market? Elections, the outcome is pretty much known. Macro stability is okay. Crude is behaving itself. What could be the next big trigger?
No, my sense is, Nikunj, we are in a kind of a steady state market. We'll have to wait and see. As you rightly said, outcome of the elections is pretty much clear. I think the external environment is what we should watch out for. There are a lot of moving parts in the external environment. If you see countries around us are slowing down, China is clearly slowing down, which is a large economy. You've seen Japan and UK border on recession, and these are larger economies in the world. US is clearly still not slowing down, but it's not really growing as fast as it was growing maybe a few years back. So I think the external environment to me is more something that you have to kind of worry about in terms of what might happen there. And that to us is, I mean, domestically, I think we are reasonably well poised. I think except for some pockets of valuation, we don't, the economy is on a strong footing. So that's not a concern. But I think the external environment is something where we don't know where the challenge can come from.
I'd like to draw your attention to again the whole issue of small cap. Now, mutual funds have said we will not accept net flows. We will only accept SIPs. There are indirect indications which are coming from regulator that bhai dekh lo, samajh lo. NSE is also saying soch kar, samajh kar, nivesh kar. This is a space where liquidity in a sense has been paramount for the underlying price action. Could we be staring at a situation where liquidity could soon start drying up because of what government is trying to do, what regulator is indicating, and where the flows are likely to move? And that could have a cascading effect.
Yeah, absolutely right. I think, Nikunj, even if the liquidity doesn't dry up, even if liquidity slows down, see, liquidity is like water. Even if it slows down, it definitely reduces the pressure. And I think the upward pressure that we've seen on these stocks, because there is so much money flowing in, I think if it slows down, it will have an impact. And that, as I said, that's the kind of consolidation that you might see in these companies. And again, it's a part of market cycle. We have seen very good 3 years, and some amount of consolidation might not be bad for the markets and for some of these companies.
Official, I think it's a tweet from Donald Trump, I would imagine.
Sorry?
No, I'm just reading out a flash. You may want to hear this. It is Donald Trump. It is my great honor to be representing the Republican Party as its president nominee. So you pretty much know that it so far looks like it is going to be Trump versus Biden. just a matter of time, looking at how Donald Trump had won in the primaries, he was almost certain to get as the Republican nominee. I think now it's official. It's a tweet, right? It's a tweet by Donald Trump. How do we have this information?
I think it's on the wires.
Wires,
It's
yeah.
not a tweet. Yeah.
Okay, all right.
Yeah, it is on the wires. He has said that it is my great honor to be representing the Republican Party. This is on Truth Social, which is his essential
because
sort of
he's
social
banned from
media
social
platform.
media,
Yeah,
right?
it's
He
his
cannot
social
tweet.
media
He
platform.
cannot tweet.
Yeah.
He cannot tweet.
Yeah.
Oh, yeah, I just realized. Thank you. He cannot tweet
Yeah,
actually.
he
Yeah.
We're so used to saying X and Twitter that we always think communication comes there. Okay, Rishabh, I'm not going to draw you to the political waters, but in general, if one looks at the Trump regime, which was pro-US manufacturing, anti-China, anything which is anti-China is good news for India. That's how things are stacked up. So can we say that whoever concerns which we had that okay, China could make a comeback, if we have Donald Trump as the new president of United States, then this India plus one and China's lost to India, that story will continue?
Yeah, I think my sense is that'll continue irrespective of who's the president. I think Biden has also done enough in terms of, pushing the domestic manufacturing in US. I don't think so. People still understand the size and scale of new manufacturing coming up in US. And I think it's only over time that we'll see the full impact of it. So my sense is that trend is inevitable. It doesn't matter who comes in, and therefore hopefully we should benefit from that if we get our act right.
So, hypothetically, 3 years from now, if we are engaging into a similar conversation, the world would be different. But what kind of market level, what kind of outperformance, underperformance do you think we are likely to stare at? I mean, from a 3-year point or 3-year time frame, where do you see outperformance and underperformance?
My sense is, look, if you're looking at, markets, valuations, of course, will maybe consolidate a bit, but overall, the nominal GDP growth continues to be in double digit. Hopefully, the market should continue to kind of be close to the nominal GDP growth, but for some correction in valuations over the next 3 years. And clearly, I think the real bet is on what will do well over the next 3 years. I think that's really is anybody's guess right now, but our view is, as I said, maybe a very different set of businesses might be doing much better over the next 3 years versus what is doing now, what is doing well now, or maybe what has done well in the last 10 years. I think the economic structure is changing far more rapidly than we give it credit, and I think the underlying change in technology, AI, everything will drive further acceleration in cycles. And therefore, to us as investors, I think the real challenge is to see what will do well in the next 2 to 3 years.
All right, Rushabh, good to have you on board. Thanks very much for sharing with us your outlook on the markets and where things stand.
If you like this video, then like, share and subscribe to ET Now.